Hello, investors. It's Mike, the growth and dividend investor over here. Today, I'm going to be talking about how to dividend invest in a Roth IRA. A Roth IRA is a powerful investment vehicle to get tax-free money. So basically, what a Roth IRA is, you can place up to $6,000 in this account every single year, and what it does is you place money that has been already taxed into this account, and then once it is time to retire, you don't need to pay taxes anymore on this account. So for example, like say you put in $6,000 within this last year to fund your account to the full $6,000 maximum. If somehow for whatever reason in like 30 years it turns into $1 million, well, when you pull that $1 million out, you do not get taxed on it. So it's a very powerful way to not have to pay taxes and allowing your assets to appreciate. The reason it's important to use a dividend investing strategy for this is that when people have like dividend investment schemes or whatever in their regular brokerage account, they have to pay a qualified dividend tax. Whereas if you put in a Roth IRA, again, anything in this account is not taxed. So if you are getting dividend payments, well, you don't have to pay any type of taxes on it, and it allows your money to grow faster, which is a powerful way to build wealth. So just kind of talking about how you can build a Roth IRA dividend portfolio. There's like two ways you can do this. There's actually many ways to do this. You can build ETFs. You can put ETFs in here. You can put individual stocks. It really doesn't matter. Anyone could build a um, dividend investment fund in a Roth IRA. So basically, I'm just going to show you guys like a sample portfolio of like maybe something I would put together. So what I'm going to do is I'm just going to make a pie here in this section. So basically, like, okay, so you want to be a dividend investor, but you know what? You don't know what stocks to pick. So you really don't know what to look for. Here are just a couple like ideas you can look for. So what usually when putting like a dividend investing plan together, what I would want to do, I would probably put maybe this in here, add to basket, Vanguard S&P 500, and then there's a Vanguard Dividend Appreciation Fund. I'm going to pick this. And then there's two other funds I want to place in here. You're going to do a Vanguard High Dividend Yield. We're going to add this. And there's one more that I want to add. It's called SPHD. And when kind of putting these things together, you got to be really careful because some of them will actually pay a nice dividend yield over here. The only thing is when you actually look at their performance, after 5 years getting negative 0.06%, that's not good. Like you at least want to see this increase like 7% a year. So realistically, we should be seeing 35% here if it's at least appreciating 7%. But some people chase yield, so you just got to be very careful about not just chasing yield. So we're just going to add this to the basket just to show like a quick rendition of like a ETF dividend portfolio. So putting this pie together literally took me, I don't know, all of like 2 minutes to put this together. So we have 4 holdings. All of these are ETFs, which basically means they're exchange traded funds where they place many, many different stocks in here, many, many different companies. And like if you own this one investment, like you're investing in the 50 of those companies or 100 of those companies or so on and so forth. So 4 holdings, 2.935% dividend yield, expense ratio 0.11. So basically like you're going to be yielding 2.82%. So this is a pretty good yield for someone who's in their 20s. Like for example, I'm 26 years old. Like I would be completely happy with this number right here. If you're close to retirement, so your 40s, 50s, 60s, you actually may want this a little bit higher if you want to be living off your dividends. So what I would probably do is if I really had to pick, I would just cut out maybe 2 of these pies over here, and then we'll get a much higher yield. So then your yield is going to be about 4%. Expense ratio did go up a little bit more, but you get a higher yield and you could live off of a 4% dividend yield. So, I mean, it was really quick just to make that. So just want to show you guys like it's very easy. You can use ETFs, but what I tend to do is I like to invest in individual stocks. So just kind of going over my portfolio. When putting together my portfolio, I wanted to go over I want to do invest, or I had three concepts that I want to have. I wanted to have minimum of 10 stocks in each sector. And in those sectors, I want them to be well diversified. So, for example, like if I would be doing information technology, I would want to have semiconductors, I would want cloud computing, I would want artificial intelligence. I would want to separate some of these things just so that I have diversity in my dividend investing. Now, if you're really trying to chase the highest gain possible, like if you're not even a dividend investor, you're just like a growth investor, like you can get away with not diversifying. But when you are building a dividend portfolio, you really should diversify just because like you want money coming in from many different areas. For example, for real estate, I have I invest in data center REITs. I invest in cell phone tower REITs. I invest in industrial REITs. I invest in medical REITs, and I invest in residential real estate and commercial real estate. So I'm diversifying it around many, many different things. So kind of going forward, so that's one of the first things I want is I want to diversify all of my different sectors that I have here. And then I want to at least have the minimum 10 stocks in each sector, or the maximum is to have 10 stocks in each sector. So 10 stocks in each sector, well diversified. Then my next criteria was to have a high market capitalization. I believe the bigger the company, the lower the chances of it failing. So I want to pick companies that are very well established that can continually build more market share and produce more cash flow. And the last criteria is that positive cash flow. Like companies can't pay a dividend if they're not making money, so they have to be making money. So if you're investing in the top companies, there's a higher chance that they're actually going to pay their dividends. So just kind of going over my portfolio, I have 10 pies. In my information technology, I wanted 29% in this sector, real estate 13, industrials 11, communication 8, financials 8, raw materials 8, utilities 7, healthcare 6, consumer 6, and top secret experimental I wanted 5%. So just kind of going over each sector of what I own just so you guys can compare and contrast your portfolios. So I have IBM, Texas Instruments, Intel, Cisco, Qualcomm, Apple, Broadcom, Oracle, Nvidia, and Microsoft. And then I'm going to be sharing all of these pies with you guys in like the little description box below. All right, this is real estate. So we have CyrusOne, Medical Properties, O Realty, WP Carey, Avalon Bay, Equinix, American Tower, Crown Castle, Digital Realty, and Iron Mountain. And then industrials, we got another 10 as well. Old Dominion Freight, Honeywell, Union Pacific, Caterpillar, Tetra Tech, Lockheed Martin, Waste Management, United Parcel Service, 3M, and Cintas. Then we have in the communication sector, we have 4 holdings in this one. We have Verizon, Cogent, AT&T, and Disney. Oops. And then the next sector is financials. So I think this one I have 5. So I have Main Street Capital, JP Morgan, Visa, Citigroup, and Bank of America. Raw materials. So when putting the raw material sector together, I want to focus more on actual materials in itself. I didn't want to have like too much like Ecolab or like construction materials. I wanted raw materials that could build buildings, vehicles, semiconductors, things like that. So I was investing in gold, silver, producing companies. And then if you guys notice in my sectors, I don't have an energy sector. I just decided to tie in the energy sector with the raw materials, or it's supposed to be basic materials. But we got ALB, Air Products, Vale, South American company, BHP, Rio Tinto, ExxonMobil, Southern Copper, Nucor, Wheaton, and Newmont. So that is my raw materials sector. Healthcare. Oh, whoops, I missed one. But Pfizer, AbbVie, Merck, Johnson Johnson, Bristol Myers, Amgen, and Gilead Sciences. I missed the utility sector, so we'll go over that one. This one, we have Brookfield Renewable, Dominion, Brookfield infrastructure, Southern Company, NextEra, American Waterworks, Exelon, and Duke Energy. And consumer sector, we have Home Depot, McDonald's, Walmart, Procter & Gamble, PepsiCo, Kimberly-Clark, Altria, Nike, Costco, and Starbucks. And then the last sector is my top secret experimental, and I have Global X, NASDAQ 100 covered call. So this is my portfolio. This is like my breakdown. I started this late 2019. So I maxed out this full $6,000 in 2019. This year, my plan was I didn't want to put the full $6,000 in right away. I wanted to cost average it over time by putting like $125 every single week. But because the market recessed and it dropped, I thought it was a great buying opportunity, so I put in a decent amount of money, and now I'm completely maxed out, so I can't add any more money into this portfolio until 2021. So this is just my Roth IRA dividend portfolio, kind of going over the overall yield of my portfolio. Let's just talk about some statistics here. So had I invested this in this portfolio in the last 5 years, this is what my return would have been. It would have been 130%, which is over 20% return over 5 years, 20% return every single year for over 5 years. I have 75 holdings. My dividend yield is 3.456%. Expense ratio 0.04%. So basically 3.41 is what I am making out of this. So basically, this is just a good way to build wealth. I'm very proud of putting this together. To me, I want to find and eat. I'm a pretty lazy person, so I would have to say that I wanted to find an ETF that mirrored this, but I couldn't find anything else, so I had to build an ETF myself. So I call this my dividend ETF. I'm very proud of it. So if you guys have any comments about maybe I should add certain stocks, go for it. Let me know. One last thing I do want to go over is talking about the power of dividend investing. So, there's many ways, there's growth investing, there's dividend investing, but I just want to show you two examples of what the power of dividend investing is. So I'm on this dividend calculator right here. So taxable account, it is not taxable. Most stocks pay quarterly. Am I going to drip it? Yes, I'm going to have it reinvest back in. Currently, right now, I have $12,000 for my starting principal. My annual contribution, I'll be putting $6,000. I don't think the tax rate matters. My dividend yield right now is 3.4%. So in terms of dividend, the company paying out a higher dividend year over year, usually in this 3 to 3.5% range, companies will increase their dividend about 7 to 9%. I'm going to be conservative, and I'm going to show you something a little different. So I'm just going to say a company's not increasing their dividend as high as we thought it was going to be, and then their share price is going to go up 3% versus the 7 to 10% that most stocks usually see. So this is the amount of money I'm going to have. So I'm going to have $1.1 million after 33 years. So basically yields 3%. It's going to be going up 3% every single year. The share price is appreciating 3%. So just over time, your value is going to increase. The first 20 years, you're not going to be able to live off of $14,000. But the beauty about the dividend investing is that over time it keeps increasing more and more. So by the time it is for me to retire, so when I'm 60 years old, I'll have $1 million in my portfolio, and I'll be able to live off $90,000. I make 76 grand a year. This is more money than I'll be making working. So the fact that I'd be getting paid more is phenomenal. So just showing you guys that this is a very powerful investment tool with the dividend increases and stuff like that. Now let's talk about putting this in a way that's actually consistent with what companies will increase their dividend yield. So 7 to 9% is what you can expect a company to increase their dividend year over year at that percentage. So do that. But let's just say their actual price in itself has not appreciated. Let's just see what happens. Okay. So after this period, you're going to have $3 million. Okay. So again, 3.4%, it'll be appreciating 7% a year. First 20 years, nothing you could really live off of. But then the magic starts happening when you get close to retirement. Look at that. just by investing in those same companies and the stock price not appreciating, but the dividend appreciating, you will have $777,000 to retire. Like, this is the power of dividend investing. So I just want to show you guys this example. This is just a dividend calculator I found off the internet. So guys, I appreciate you guys watching. I just want to show you guys, kind of putting together a little Roth IRA and how to dividend invest. And, hopefully you guys learned something, and, you guys have a great day. Don't forget to like and subscribe.